In today's video, I'm going to share with you a very profitable Fibonacci strategy I use in printing money from the market. You're only 3 steps away from becoming profitable with this mechanical system. So let's get started. So the first step for this strategy is drawing our trend line. So we need to draw our trend line, and I've made a couple of videos about trend line. You can see the link somewhere around here where I show you some of my trend line strategy in the stand, but I'm still going to show you guys how to draw a trend line. So what do we do? You go to your tool. Trend line is just a tool which we just use to understand the trend of the market. And mind you, when I'm using the Fibonacci strategy, the Fibonacci strategy only works in the trending market. So we are drawing our trend line to know and to be sure that the market is in a trend. Because if you have a choppy or ranging market, this strategy can't work. So Fibonacci strategy is a retracement tool. Fibonacci is a retracement tool. Understand? And it works only in a trending market. So now we go and pick our trend line, then we draw it. I'll draw it. So we can see this is the trend of this market. This is the trend of this market. And before a trend line can be valid, we need to have at least minimum of 2 touches, 2 or more touches, but a minimum of 2. You understand? So we had 1 here, then we had 2, then we had 3 and more. That is a valid trend line. So if you can notice, what happened here was this was like a fake out, but this trend line rejected it, because remember, trend line acts as a level of support and resistance also. So first is to draw our trend line. So let's go to the second step. So now the second step is for us to draw our Fibonacci. Remember, this is a Fibonacci strategy, so we are going to use the Fibonacci. So it's now we're going to apply the Fibonacci. So what we are going to do is that we go for our Fibonacci tool, which is on the left corner on trading view here. So we pick the low. So mind you, we've already know that this is a trending market. So when we've seen at least 2 touches, that is when we know that, okay, yes, let's use the Fibonacci retracement to know the next direction of the market. Because remember, what we are doing is that we are trying to catch those pullback moves in the sun. Because if a market is in a trending market, it can't just be going up. It comes down before it goes up. So that's what we're just doing basically. So now we start from the low to the high. So let me just explain the Fibonacci tool shortly. So now on the Fibonacci, we have 4 major levels, which is 0.382, 0.5 and 0.62 and 0.786. So in this strategy, we are only using the 0.618 because that is the one that has the higher probability. Because if you are trying to use multiple fib levels, it's going to create a conflict in interest, because sometimes the market rejects only on 0.82, sometimes 0.5, 0.612, sometimes 0.786. So you just have to pick one to have a more profitable strategy. So for this strategy and video, we're only using 0.618. So we're using the 0.618. So now we wait for the market to touch the 0.618 before we can say that this is a valid entry. Let's go to the third step. So on the third step, we need to identify a major supply or demand zone is in confluence with a 0.618 level, and that level must act as a support or resistance. Mind you guys, in this example, we have a bullish trend. So if you're having a bullish trend, we are looking for supply zones, a supply level in conjunction with the fib level 0.618. Let me show you guys what I'm saying. So here we need to identify a supply zone where the fib level reacted from. So the fib level reacted from this supply zone, from this supply zone. So now we have 3 confluences. Number 1, the trend line. Number 2, fib 2, and number 3 is supply zone that is in confluence with the fib level 0.618. So the supply zone must be in between or anywhere around the 0.618. Sometimes it could be above, sometimes it could be below, but the supply zone and the 0.618 level must have a confluence. You understand? They must have a connection together before it's valid. And to have a more valid trade, that supply zone also must also act as a major level of support and resistance. Like what I mean support and resistance, that where price reacted from, maybe when price got there, it rejected. So if we drag this one down, we can see, that this is a major, let me show you guys, this is a major support and resistance zone. You can see what happened here. The market rejected it, where the market rejected here. If you can see what happened, the market bounced off here, broke it, had a rejection here, break it back up, bounced off here, so it bounced off. So all this reaction here is just showing that this is a major key level. Like this is a major key level where the buyers and sellers can decide on where they're trying to move the price. You get what I'm saying? So these are the major key steps you need to do. So let's take one more example. You know, this is a bullish example, then let's take a bearish example. So now what do we first do? We first draw our trend line to identify the trend of the market. So, and what's our number one rule for drawing a trend line? We need to see a minimum of 2 touches in the same direction of the market. So 1, 2. So we have a valid trend line here. So let's continue with that. 1, 2, 3. So this is the trend line here. So this is our trend line. This is our trend line. This is our trend line. So now we need to look for entries. We've drawn our trend line. So what do we do next? We need to draw our Fib tool. So we pick our Fibonacci tool. Then we start from here to down here. So do we have any confluence at 0.618? Yes, we did. And the 618 must have a conjunction with the 618, and it must reject the trend line. Because now some people might be confused about how do we determine which point do we draw our Fib tool from. We are identifying where the market will retrace from, and we want that to be in confluence with the trend line. If you look at this, we had how many touches here? We had 1, 2. So our aim is that automatically the third touch, we are expecting it to align with the 0.618. If it doesn't align with 0.618 and it touches from this, it's not a valid trade for this example. We are only going for trades where the trend line rejects from the 0.618 and it touches the Fib level 0.618. And why do we use this high? We use this high because, let me delete this first so that you can see. We use this high because this is a major high. You can see this low. This was the previous high here. Since this low was broken, this became the new high. You understand? So this is the latest high. So that's why we drew our Fib tool from here. I hope you guys are getting what I'm saying. So that's why we drew our Fib tool from here. Then we draw the Fib tool down to the last low. This was the last low. You understand? So that's how we arrive at this point. We are still left with a last step, which is it must be in confluence with a supply or a demand zone, which acts as a form of support and resistance. So since we are having a bearish trend here, we are looking for a demand zone. Remember, bullish, you're looking for a supply; bearish, you're looking for a demand zone. So can we identify any demand zone here? Definitely we can identify one, which is here. We can see that this is the demand zone that was in confluence with the 0.618. This is the demand zone. And to be more sure, we need to see that demand zone acted as a level of support and resistance also. So let's check that out. Oh, perfectly. We can see that it acted as a level of support and resistance in the market. So we can see that it acted as a level of support. The market got here, bounced off, bounced off, bounced off, bounced off, bounced off. And what happened? It finally broke it and it came to retest it here. So this is a A+ setup trade. So that's it for today's video.